Hi there, my name's Andrew Barnett, Senior Trader here at Trading Mastery. Well, I've been trading the financial markets as a private professional trader for coming up 20 years, and I've been guiding and mentoring traders in the financial markets for the last 12 or 13 years. And we've seen some significant shifts in financial market sentiment. Of course, we were in a bull market in 2019 and come around into the 20th of February and the financial markets fell the quickest they have over a 3-week period ever in financial market history. And we are now in a bear market, down more than 20%. So I wanted to share with you today some helpful tips with respect to how you might consider investing through a bear market. Over the course of the last 10 years, if you've been trading in the financial markets and buying stocks and perhaps investing in some other derivative markets, the markets have essentially been stair-stepping higher. We've seen the S&P 500 in the United States up over 320% over the course of the last 10 years. And the Australian stock market is up around 120%, and just over 3 weeks down around 30 to 33%. And a lot of traders and investors around the world have not experienced what we're seeing right now. So therefore, there's a lot of questions around how should they invest, what should they be looking at, should they be looking at small cap, mid cap, should they be looking at blue chip stocks. I wanted to share with you today just some tips with respect to the way I'm investing, the way I'm sharing my thoughts and my strategies with my clients here at Trading Mastery that can help you through 2020 and give you the idea of perhaps investing with a slightly different approach. So let me share with you the approach that I'm using right now. Because in 2019, I was essentially trading stocks. I made around about 25% return on investment for the year. And this year, I'm using a very different approach. I think you will have success by widening your time horizon instead of looking to trade in the short term, which has more risk associated with it, looking to a 1 to 3 year window. For example, the stocks that I am buying right now, which I'm sharing all of my positions with my Trading Mastery clients as I do, is I'm not looking to sell those positions for the next 12 months. The reason being is because many of the stocks that I'm buying are great brands, great companies that I plan to hold for the next 12 to 18 months that I believe will bounce back quicker and faster than many other stocks. And therefore, it may take a little bit of time with the increased volatility, and whilst I never average into my currency positions, over the course of the next 3 or 4 months, I will drip feed into the stocks that I am buying some more money so as I can get a position that over time can rally the price back higher and get me an above average return on investment. So my first tip is to widen your focus out to perhaps a 1 to 3 year window rather than focusing short term. Shorter term in the stock market particularly is likely going to only increase risk. The second thing is focus on companies that have really strong balance sheets. Focus on companies that don't have a lot of debt, that have cash flow. A lot of small to mid cap stocks right now have a lot of debt, don't have a lot of cash flow. So I want you to give consideration to focusing on stocks that have very strong balance sheets, a lot of cash, and will likely survive and thrive on the other side of this crisis, which are the blue chips. And of course, at Trading Mastery, I share with my clients all of those particular stocks. The next thing I want you to focus on is focus on the big brands that have superior differentiated advantages. What is a superior differentiated advantage? A company such as Coca-Cola, a company such as Apple. Nobody is going to come along tomorrow and challenge Apple with a new phone or the technology that Apple has, or a Google or a Microsoft, or a company such as Boeing, which has actually had a lot of challenges recently, but its share price rallied 19% in the last 24 hours as I record this video. There's a few question marks whether or not the US Fed is buying US stocks right now, but I encourage you to focus on those big brands. And many of you might be saying, well, that can be boring. Guys, just look at financial market history. Those big brands with superior differentiated advantages, over time, their share prices just continue to rise. Berkshire Hathaway is another one. And it doesn't matter where you live around the world, there are great quality brands that you can look to right now that have great balance sheets run by very strong management. Consider staying away from small to mid-cap stocks. Most of them right now will have problems with cash flow, and those that have a lot of debt. For example, here in Australia, Virgin Australia, one of the airlines here, is having a lot of problems. They may even go bankrupt by September if they can't get cash. Focus on companies that don't have debt problems. Stay away from the small to mid caps that do, and you'll give yourself a better opportunity to manage your risk. Those people focusing on those small to mid cap stocks that might get those big flushes higher, don't forget, you could see a very significant flush lower as well. The final tip that I want to share with you today is give them some consideration to ETFs, exchange traded funds. This gives you the exposure to an entire index opposed to just choosing individual stocks. For example, you might buy an ETF of the FTSE 100, or you might buy an ETF of the S&P 500. There are wonderful vehicles that are very simple, one investment that gives you exposure to the overall market. We are seeing stocks on sale right now around the world. Even after the recent rally in the last couple of days, we are still seeing markets show signs of bearishness. We are still in a bear market. And if we have a look at history, bear markets generally take 13 months before we recover, and bear markets are generally also associated with recessions. So there you go, guys. Some tips today to help you trade through a bear market. If I can share with you any more helpful tips, you can jump across to tradingmastery.com.au and I'll be more than happy to help you. I wish you every success with your investing and trading, and I'll see you next time.